If you want a quick shortcut to being well informed about the giants that run our digital lives, you really have to look beyond Silicon Valley. Today, we are doing a major deep dive into América Móvil, or AMX.
Right.
This is one of the world's largest and maybe one of the most structurally complex global telecom operators. It's based out of Mexico City, a spinoff of Telmex, but its reach, it spans the Americas and goes deep into Europe.
And that scale is really the crucial context here. Our mission today is to pull apart their most recent annual reports, those dense 20F filings, to grasp really three main things.
Yeah.
Where they stand financially after 2024, the big strategic shifts they're making, and the intense, continuous regulatory battle they face as a dominant player.
But the core tension we want you to walk away with, the thing that makes this deep dive so fascinating, is the paradox at the heart of this whole enterprise. On one side, you have this highly regulated, publicly traded company. It provides meticulous, line-by-line financial disclosures to global investors. And on the other, you have the expansive and, notably opaque philanthropy associated with its main owner work that is profoundly influencing society, especially in Mexico.
It's a study in parallel power structures, really.
Mm-hmm.
How does a company navigate the demands of global public markets and regulators while at the same time exerting this immense yet non-transparent influence over health and justice?
Corporate strategy meets social control. It's a lot to unpack.
It is.
Okay, so let's get into it, starting with that global financial snapshot for 2024. AMX is a seasoned issuer. They're incorporated under Mexican law, and we should note they recently cleaned up their capital structure.
They did. They converted all those complex share series, the AAA and L shares, into a single series of B shares.
Yeah.
That started back in early 2023.
So a much simpler structure now.
Much simpler. And that conversion resulted in a massive public float. We are talking about 61,000 million B shares outstanding by the end of 2024. If you're a U.S.-based investor, you just have to remember that each B share ADS represents 20 of those underlying B shares. It's a small detail, but it matters for tracking the equity.
Right. But what really matters is the magnitude of the business itself.
Absolutely.
So let's talk magnitude. In 2024, AMX pulled in operating revenues that were nearly 870 billion pesos. To put that in perspective for you, that's roughly 43 billion US dollars.
Wow.
In top-line revenue, the scale is just immense.
It is. And the operating income followed suit, coming in at, 180,100 million pesos? So by conventional metrics, the operation was robust.
And this is the critical shift. Despite that massive revenue, the net profit for the entire year it fell off a cliff.
A huge drop.
It plummeted from over 80 billion pesos in 2023 down to just 27.6 billion in 2024. That is a drastic reduction that needs some context.
It does. And if you step back and look at the reason, it wasn't a sudden breakdown in their operations. It was all macroeconomic.
Yeah.
The financial results were just devastated by currency volatility. AMX is huge. It operates across so many economies. And the Mexican peso weakened sharply against the U.S. dollar, the euro, and critically, the Colombian peso.
So all the operational success they had was basically wiped out by exchange rate shift.
Precisely. The volatility created a net foreign exchange loss of a staggering 70.7 billion pesos, plus you had additional losses on derivatives. The profits were there on paper, but the moment they had to translate those international earnings back into Mexican pesos, the value just evaporated.
Wow.
It really highlights the inherent risk of running a dominant carrier that spans so many disparate, volatile economies.
So that puts the operational results in a very different light. It shows they were just fighting these macro headwinds they couldn't control. So how did they handle capital allocation in the face of that?
Well, they maintained their commitment to returning capital. They paid out 31 billion pesos in dividends, which was a small bump from the prior year. But what's strategically telling is the aggressive increase in their share repurchase program.
They spent way more on buying back their own shares, right?
A major escalation. They spent 22.7 billion pesos repurchasing stock in 2024. Compare that to 14.3 billion in 2023.
That's a big jump.
It is. And when a company gets hit hard by external volatility, yet aggressively increases buybacks, it signals a really strong conviction in its own underlying value.
Let's transition now to corporate strategy. Because AMX is not just passively managing its assets, it is aggressively restructuring. We saw two major moves recently, starting with the very complex consolidation of Claro Chile.
This was a long game. It started in late 2022 as a 50.50 joint venture with Liberty Latin America, or LLA. For a while, Claro Chile's results were kind of parked and reported as discontinued operations.
But that structure reversed pretty late in 2024.
Yes. Once they got regulatory clearance in Chile, AMX moved fast to regain control. They converted some outstanding notes they held into equity, which boosted their ownership to around 91% immediately, and it rose to nearly 95% by year-end.
So that was just about simplifying the structure.
Exactly. It's a classic move to simplify a structure that probably wasn't working efficiently as a JV, and it solidifies AMX's command over a key regional market.
And the second major move was pulling infrastructure out of their services business, which is something we're seeing across the whole telecom industry.
That's the tower infrastructure play.
Yeah.
They took the mobile towers from Telecom Austria TKA across most of its operating countries, including Austria, and spun them off into a dedicated company called Eurotelesites AG. That new entity listed on the Vienna Stock Exchange in late 2023.
And what's the strategic takeaway from creating Eurotelesites?
It's a pure optimization play. Telecom towers are passive, capital-intensive assets. By spinning them off, TKA injected about 290 million euros in assets into this new company, and now AMX can unlock the value of that infrastructure. It often appeals to investors who just want steady, infrastructure-based returns.
That gives us a really clean strategic backdrop. So now let's connect this to performance on the ground. When we look at the regional segments, Mexico fixed operations provided, I think, one of the most surprising efficiency stories.
It was startling, wasn't it?
Yeah.
The Mexico fixed segment reported adjusted segment operating income growth of a staggering 1,935% from 2023 to 2024.
1,900%. That's not a typo.
Not a typo.
A near 20-fold increase in operational profit for that one segment. What drove that incredible gain?
That massive leap wasn't driven by equivalent revenue growth. It was a ruthless execution of cost savings programs. They are actively optimizing and streamlining their legacy fixed assets, and that offset rising costs in other areas like network maintenance. It just shows a company that's focused on sweating its existing assets for maximum profitability, which, again, it dovetails perfectly with their focus on aggressive share buybacks.
And despite that focus on cost, their fixed broadband subscribers, the RGUs, still grew by a healthy 6.9%.
Still growing, yeah.
Okay, so moving south, Brazil showed more mixed results. They are succeeding in wireless, aren't they?
Yes, their wireless commercial efforts are definitely bearing fruit. They saw postpaid subscriptions increase by 4.7%, successfully converting a lot of prepaid users into higher-value postpaid contracts. That's where the industry is moving.
But the flip side is the fixed market in Brazil.
Exactly. Total fixed RGUs decreased by 3.0%, and that was driven overwhelmingly by a steep and 8.5% decline in traditional pay TV subscriptions.
The cord-cutting trend.
It's a consistent global trend. Consumers are cutting the cord, and AMX has to manage that decline in legacy services while heavily investing in data connectivity.
And finally, we have Argentina, which that adds an immediate layer of complexity because of its hyperinflationary environment.
That's where the accounting rules, specifically IAS 29, become critical. Because of hyperinflation, AMX can't just compare year-over-year results using nominal pesos. They have to use constant Argentine peso terms.
It's an accounting hurdle, basically.
Right, just to make the data meaningful.
Yeah.
Yet, even with that complexity, the segment showed robust operational expansion. Total wireless subscriptions were up 3.9%, and fixed RGUs increased by 14.2%.
So across the board, the company is fighting these two relentless, interconnected long-term trends. Intense competition that drives up customer acquisition costs, and this rapidly growing demand for data, which forces them to keep spending on capital expenditures.
That is the perpetual challenge of a telecom giant. The infrastructure needs are just nonstop, and capital is expensive.
Okay, let's pivot now to the risk profile, because given the scale, the risks are substantial. The first is regulatory exposure, especially around their market dominance.
AMX is a constant target. In key markets like Mexico and Brazil, they're subject to what are called asymmetric measures. And you can think of these as regulations designed specifically to limit the market power of the biggest player. Regulators impose strict requirements on rates, on service quality, and on how they grant access to their passive infrastructure.
Yeah.
All of which, it just chips away at their profitability and their strategic flexibility.
And their operating licenses are always under threat. These concessions, they run 5 to 20 years, and renewal is never a guarantee. It often requires agreeing to new and stricter terms.
It's essentially a permanent regulatory disadvantage baked right into their operating model. On top of that, you have to note the massive legal exposure. They're currently contesting huge tax assessments, especially in Brazil, Mexico, and Colombia.
And if those go against them?
If those proceedings are determined adversely, the material impact on their financials would be staggering.
Now, this leads us to the section that, it really raised the most eyebrows in their recent filing. It's a major governance shock. Management concluded that the internal control over financial reporting, what the SEC calls ICFR, was not effective as of December 31st, 2024.
That is the corporate equivalent of failing a structural integrity inspection. For a company of this size, declaring a material weakness in internal controls is a huge deal.
A huge deal.
Now, it doesn't mean the 2024 financials were necessarily wrong.
Yeah.
Management was explicit that they did not result in a material misstatement. But it means the system of checks and balances designed to ensure accuracy is fundamentally broken.
Okay, let's break down those weaknesses. The first 2 points relate to specific segments. Colombia and Mexico fixed.
Yes, the first weakness points to a massive failure in what are called Information Technology General Controls, or ITGCs.
The digital plumbing.
Exactly. Think of it as the digital security plumbing. They found ineffective controls related to user access, change management, and segregation of duties. This means they cannot adequately track who accessed what financial data or why the systems were changed. It compromises data integrity from the ground up.
And the second weakness hits their revenue specifically in their largest domestic market, Mexico Wireless.
In that key segment, the controls governing prepaid and postpaid revenue processes were just not effectively designed or operating.
So the systems for tracking money from cell phone customers.
Basically, yeah.
Yeah.
The mechanisms they use to ensure they accurately capture, track, and report the billions in revenue from every single cell phone customer were deemed inadequate. That is a massive operational vulnerability.
And the third weakness kind of ties those all together.
It does. It connects back to the reliability of the underlying data. Management found that the controls of those three segments, Colombia, Mexico Fixed, and Mexico Wireless, were not designed or operating effectively enough to assess the completeness and accuracy of the information used by other controls.
This was a systemic problem.
It's a systemic problem. It indicates a lack of basic data governance, and it's something the company has to pour massive resources into fixing, and fixing quickly, or they'll face serious consequences from shareholders and regulators.
It's a delicate tightrope walk, for sure. We also see emerging risks they acknowledged, like the development and use of AI. The company notes this could lead to new legal or regulatory actions, specifically around data protection.
Absolutely, and that seems especially relevant given the ITGC failure we just discussed. Those governance issues make them extremely vulnerable to future data regulation.
And then there's ESG risk.
Right. The company has to contend with the fact that there's no market consensus on what is green or social or sustainable. It's a moving target, and a failure to meet these rapidly evolving expectations, even informal ones, can really damage the brand or harm their access to capital.
Now let's use this moment, this failure of corporate accountability demonstrated by the ICFR material weakness, as our bridge to the other side of this story. The societal influence funded by the immense wealth of the key ownership figure.
This is where the paradox becomes razor sharp. On one hand, you have the pressure for rigorous financial accountability in the corporate sphere, where even IT controls have to be meticulously detailed. On the other hand, the vast philanthropic organizations associated with the enterprise are, as you said, notably silent on transparency.
They're providing statistics on activities, how many surgeries performed, how many computers donated, but there are no hard numbers on spending, endowment size, or staffing overhead. It's an entirely different model of influence.
One where impact is prioritized over financial disclosure. And what's fascinating here is that the foundation's focus seems intensely personal, centering on chronic diseases.
That focus is definitely rooted in family experience. The founder's wife died of renal failure, and 2 of his sons later required kidney transplants. This personal tragedy, it seems, translated into a massive institutional focus on chronic disease prevention and early detection across Latin America.
And the results can be profound, leveraging technology and existing systems. Take the Amenities program. They deployed these well-equipped medical vans to test pregnant women in remote villages and implemented specific preventive drills.
Incredible.
At one hospital that previously averaged 3 maternal deaths per year, the program led to 0 maternal deaths over a 2-year period.
Wow.
That is leveraging wealth for tangible, life-saving societal benefit.
The impact is undeniable, but the most controversial program they undertake deals with the justice system, posting bail bonds for thousands of individuals.
This program has posted bail for nearly 100,000 people to date. It sounds radical, but the criteria are extremely strict.
Okay.
You have to be a first-time offender, charged with a non-violent and non-sexual crime, and crucially, you have to be too poor to afford bail. They prioritize people who are the main economic support for their families.
So why is this program so structurally important in Mexico?
Well, if we connect this to the bigger picture of the justice system, it highlights a deep structural flaw. Mexico's system often sees people presumed guilty until proven innocent.
Right.
They can be unjustly incarcerated just because they can't make a small bail payment, shattering their lives and families before they ever get their day in court. This philanthropic effort, while it's non-transparent, functions as a direct intervention. It's addressing systemic social inequality caused by poverty within the judicial system.
We have completed a full circuit now on América Móvil. We started with a massive, complex, regulated telecom powerhouse that is battling major financial volatility from currency swings, undertaking these aggressive structural changes like the Chile consolidation and the tower spinoff,
Right.
and wrestling with serious internal IT governance weaknesses flagged in their 20F filing.
And we end by seeing that this immense corporate reach is twinned with these non-transparent yet profoundly impactful philanthropic initiatives that act directly on issues like maternal health and the failures of the justice system,
The company has to battle regulators and auditors?
while the associated wealth can quietly address social deficiencies.
So what does this all mean for you, the well-informed observer, looking at the long-term success of this enterprise? In a globally expanding, heavily regulated industry driven by constant technological change, is the long-term viability of an enterprise like AMX more reliant on overcoming the visible corporate obstacles like regulatory asymmetric measures and internal governance flaws? Or is it more reliant on the parallel, often hidden ability of its associated figures to influence societal structures through targeted non-corporate intervention?
Is the ultimate source of power derived from the transparency of the balance sheet or the opaque influence of the foundation?
Something to mull over until our next deep dive.